Let's quickly look at this question under payroll. Okay, so I'm reading the question. The following is an extract from HR records of Rama and Habriya Company. Payments and taxes are determined based on the schedule below. Use the information to answer questions 42 to 50. So we have the net contribution to be 5.5% from employees' basic salary. Then we have the overtime rate for all work above 40 hours to be 1.5 times the regular rate. Okay. No weekend duty is allowed in this company. And we have the monthly tax schedule, okay, as well. So for the first 288, we are not going to take any tax on it. That is tax free, so 0%. Okay. Then for the next 150, we charge 5% on it. For the next 600, we will charge 10%. For the next 3,600, we will charge 17.5%. And for the next 18,472, we will charge 25%. And for all the earnings or the income above 25,002, you pay 30% flat rate. Okay. Yes, and we have all overtime to do what? 10% flat. Okay. So we have the table here, the name of employee earnings, deduction, and what? Net income. So you have the earnings, we have the regular income and the overtime income. When you add the two, you are going to get gross earning as you see over there. Then when we talk about the deductions is your tax, the taxes that you pay, either your regular tax or overtime tax. Then we add it to your SNETs. Then we add it to the others. The others can be a draw. Maybe you borrowed from the company when you were treating commission. You understood the meaning of what draw. Yes. So the others can be a draw. So we add those three, the tax, net, and others together to get your total deduction. So in a point where we are asked to calculate for net income, it means we are supposed to take the deductions from what? The gross income. I hope you get it. So your net income is going to be what? The gross earning minus total deductions. I hope you understand that. Okay. So that is what we are going to do. Okay. So without wasting much time, let's start with the question. Okay. So the question says, what is Mohammed Issa's regular what earning? Now Mohammed Issa hourly rate is 60. Okay. So Mohammed Issa, question number 42. Mohammed Issa. So we have Mohammed Issa. The hourly rate of Mohammed Issa is 60 Ghana cedis, right? Then number of hours worked. He worked for 60 hours. Hours worked is 60. He worked for 60 hours. Okay. So 60, right? So what we are going to do is, we know under payroll in Ghana here, when you are working as a government worker, or in Ghana under normal circumstances, you are supposed to work from Monday to Friday, 40 hours in a week, right? So each day you are supposed to work for 8 hours. So it means we are going to take 40 hours from the hours worked and use that one to calculate for the regular earning, because the regular earning is under normal circumstance the amount that you are supposed to earn. I hope you get that. So first of all, the question said we should calculate for what? The regular earning. The regular earning. Okay. So the regular earning here is going to be what? The hourly rates. That is how much we want to pay you per every hour. Then the whole week, the number of hours you worked. Do you get it? This 60 here, it means he worked extra what? 20 hours, and that is what we call overtime. And when you are calculating for regular and we don't add the overtime. Do you get it? It is just the hourly rate and the number of hours worked. And the number of hours worked as an employee in Ghana, it is supposed to be what? 40. So have it in mind. Anytime you are calculating for regular earning for anyone, you must use what? 40 multiplying the hourly rate. The hourly rate is how much you want to pay the person per every hour. So that is what? 60 Ghana cedis. Okay. So in this case, 6 times 4 is 24. 24. Then we add our two zeros. So 2,400 Ghana cedis. So Mohammed's regular earning is 2,000 what? 400 Ghana cedis. Okay, that is for Mohammed. Then let's look at how much overtime does Mohammed Isa pay. So how much overtime? Tax, right? How much overtime tax? So before we calculate for the overtime tax, we have to get the overtime amount. Do you get, or the overtime income? So we say our overtime is also equal to the overtime rate. Overtime rate multiplied by your hours worked. Do you get it? Or yes, number of overtime and overtime. Or I should use hours worked. Overtime hours. I'm sorry, okay. Overtime hours. Okay, yes. I just wanted to write something for you to understand. Just wanted it to stick in your head so that you wouldn't just forget. The overtime rate is talking about how much uh, we pay per every hour, right? Yes, of overtime. Then this is talking about the number of hours that we are considering as the overtime. So when we say the overtime rate here, the overtime rate, you always have to calculate it with yourself, okay? Yes. So how do you calculate the overtime? The overtime is in a state or a form where you don't even need to calculate for it. You just have to what? Write it. Do you get it? You just have to observe it and you write it. This is how we calculate for the overtime. We are saying all overtime is 1.5 of the hourly rate. So 1.5 or 1.5 of the hourly rates. So whatever we are giving to you per hour, if you work 1 hour as overtime, we will give you that amount, then you add half of that amount to it. Okay, so you know our hourly rate, the hourly rate for Mohammed is what? 60, right? And so that is the one here. And the 0.5 here is talking about half of this amount. So it means plus half of this amount is 90. I hope you get it. So when you are talking about someone who is earning 40 per hour, and if you want to get the overtime income for the person, you give the person this 40, then you add half to it. So this will be the hourly rate for the overtime. So it means every 1 hour of overtime will be this. So you can just, let's say someone who is being paid 30 per hour, just observe it and say the answer. So you see you are going to get what? This 30, that is the one you see over here, 0.5 or half, so plus 15, and that will give you 45. That is the overtime. I hope you get that. But I know that in most of the calculations or the things that you have been taught, this is how you calculate for the overtime. 1.5 of the hourly rate, so 1.5 times the 60. Okay, 1.5 times the 60, that is the hourly rate, and you are going to get the 45. Do you get it? Because no, you are going to get 75, sorry, not 45. 90, because 60 plus 30 is 90, sorry. Okay, it's the same thing, like 60 plus half of 60 is 30. And so the overtime rate is going to be 90. So this is the overtime rate for Muhammad, 90. So it means anytime Muhammad works for 1 overtime hour, he is going to be paid what? 90 Ghana cedis. I hope you get that. 90 Ghana cedis. And so here we are going to calculate for the tax. And before we calculate for the tax, we have to get the income. And how do we get the income? It's here. The overtime income. How do we get the income? We get the income by saying overtime rates, which is the 90 that we are paying Mohammed, okay, times the number of hours, because this 90 is per hour. So if he has 10 override hours, we multiply the 90 by 10. If he is having 20, you multiply it by 20, because this is per hour. So now 60, and we took 40 as when we were calculating for the regular end. Do you get it? Now what is left is what? 20. I hope you get that. And that 20 is what? Overtime hours. So we are going to multiply the 90 by what? 20. 9 times 2 is what? 18. So 18, and we add our two zeros. 1,800. Is that good? Yes. So now we are done calculating for the overtime income. So the 1,800 you see here is what? Overtime income. Okay. It's overtime income. And that is the 1,800. Is that good? Yes. And so we are supposed to calculate for the overtime tax. Overtime tax. We were given the overtime tax rate to be, that is in the question. They said all overtime to be what? 10%. Okay. So the overtime tax is going to be what? Your overtime income, because overtime tax is charged on overtime income. So you say overtime income multiplying the rates, that is the 10%. So the overtime income is 1,800 times the 10%, or you can say 0.1. So 0.1, so one decimal place like this, okay. Or let me clean this one so that you can write it. So 1800 times 0.1 is just 1, so one decimal place like this. So you are going to get 180. I hope that is clear. I was just breaking it down for you to understand, but when you get to the exam hall and you understand, you don't do all these calculations. I hope you get that. That one, you just take your 40, then you multiply it by 60, right? The hourly rate 60 to get your regular earning. If it is about tax, you take the 20, the remaining 20 hours. You know this one is going to be 90. That is why I said just learn and understand how you get the overtime. You just take the full hour, then you divide it by 2. Now they account. So I've spoken fancy. 3. So 60, right? Then 0.5, so it is going to be plus 30 divided by this is 30, right? So 90. So if you know all these things, when you are in the exam, so you go fast, so that you'll be able to finish. I hope that is good. So this is what the overtime or tax for Mohammed, the tax that he is supposed to pay. Then what is Kumoji? Is the name, sorry, Kumoji Zolasi, overtime income. Okay. So, okay. Yes, I would want to claim this one so that I'll get more space for our calculation. Okay, so Kumoji overtime income. Now Kumoji has hourly rates. Kumoji hourly rate of, sorry for pronouncing the name wrong. So if you are having that name, I'm sorry I couldn't mention it properly. So that is 58. The hourly rate is 58 Ghana cedis. Okay. Then the number of hours is what? 62. So hours worked is 62 hours. Here you were asked to calculate for the overtime income. Okay. So overtime income. Overtime income. Because of time, I wouldn't be writing the formulas again. Okay. Yeah. So you know the overtime income is what? Your overtime hourly rate times what? The number of hours. Now when you check this, that, so basically let's calculate for the regular earning, then you calculate for, because I think the second question is even saying how much is Kumoji's Zulasi regular income tax. So it means we still have to calculate for regular and the overtime. So in order not to get confused, let's start from the regular. Other than that, if you don't have a question under it like that, what you are going to do is you take the remaining on 40. So you are going to be left with what? 22, right? So your overtime hours was just going to be 22 times the rate will be what? 58. Then you divide 58. When you divide 58, what are you getting? Uh, is it 29? Right? You are getting 29. So you add the 29 to it, and that is all. Okay. Yes. So this one is giving you 70, 87. Okay. Yes. Let me confirm with my calculator before I make a mistake. So 1.5 times 58 is 87, of course. So 87 Ghana cedis. And when you multiply, you get the overtime income, and you are done. I hope you get that. But okay, let's solve it according to how the question is. So we are solving overtime income. Yes, sometimes I don't need to solve it more simpler with you. Do you get it? So that when you get to the exam, so you see it this way, you will just struggle. Let's go by it as it is in the question. Okay. Yes. So overtime income, we have our overtime rate. We know the overtime, the number of hours is going to be 22, because when you take the regular, which is 40 from 62, you are going to be left with what? 22. Then you multiply it by your hourly rate for overtime is going to be days times 1.5. Okay, and you get 87. So therefore your overtime income is going to be 22 times 87, 1914. So 1914 Ghana cedis. Okay, 1914 Ghana cedis. So that is your overtime what? Income. All right, now let's move on to the next question. 45. This is 44. Now 45. How much is Kumoji regular income tax? So the regular income tax, that is what we are going to calculate for. Regular income tax. Okay. Yes, or regular tax. Okay. Yes. So before you calculate for regular tax, you need to get what? Your taxable income. Is that good? You need to get your taxable income. Then after getting the taxable income, you use the charts to calculate for the regular tax. I hope you get that. Yes. So we are first going to calculate for the regular income. Then after getting the regular income, we will take allowances from it to get taxable income. Then we will use that taxable income for the chart. Okay, yes. But if we don't have any allowances, it means our regular income will be our taxable income, as simple as that. Okay, so regular income tax, let's first calculate for regular earning or regular income. So the regular income is equal to 40 times the hourly rate, which is 58. Okay, so 40 times 58 is giving you what? 2,320. It's giving you 2,320 here. So that is your regular what? Income. Let's check from the question if allowances were given. Okay, so we have the SNAT overtime, we have the no weekend, we have the schedule, we have all overtime. Let me check from the table. We don't have allowances, right? Yes, you were not given any allowances. So a point where allowances are given, either first child, second child, or food, clothes, whatever, that one you just add all the allowances. Okay, then you subtract it from the regular income to get what we call taxable income. I hope you get that. Now, since we don't have regular any allowances, it is going to be taxable income. I just want to follow the procedure so that situation whereby you see allowances, you know how to calculate for it. So your taxable income is equal to your regular income minus what? Allowances. Here I'm pretending as if I don't know allowances were not given. Okay, yes, I'm just pretending. So taxable income is regular income minus allowances. Now, what is the regular income? 2,320 minus. Then you check for allowances. You don't have allowances, so it becomes what? 0. Okay. So your taxable income. This is how you are going to solve it. In case of any theory or any other thing, this is how you're going to do it. So 2,320. Okay, so that is your taxable income, and this taxable income is what you are going to use to calculate for the chart they gave you. So we are going to use this amount to calculate for the chart. So let's start. The first 280 is tax free, so we are calculating our tax, the tax. So for the first one is what? 288. 288. Here we no first 288. For the tax, it is going to be what? 0 Ghana cedis. Yes, we are not going to take anything from it. Okay, so this 288, we have to subtract this from here to know the remaining amount. So once we tackle each step or each level, we have to subtract this from the taxable income so it's finished, just like when we were treating the LIFO and the FIFO. Okay, so we have 2,320. Now we have taken 288 as tax free from it. Okay, what are we left with? So 2,320 minus 288, we have 2,032. So this is what we are left with. And yet, when we look at our next, yes, it means it can satisfy it. So our next is 150. So next 150. Next 150. You are going to pay a tax of. So the next 150, you are going to say 150 times what? 5%. Okay. So 150 times 5%, 7.5. So you are going to pay 7.50 tax. I hope that is clear. Okay, so now when you take this 150 that you just used from this 150, 2032 minus 150, you are left with 1882. Okay, so this 1882, yes, it can satisfy the next condition, that is next 600. Next 600. So we have next 600. Okay, and the next 600, yes, what is the percentage? 600 times 10, and that will give us 60. Okay, we are going to get 60 here. So once you see what we are doing here, when we take the level, we multiply it by the percentage. When we take the level, we multiply it by the percentage. But in as much as we are multiplying it by the percentage to get the taxes, we are also subtracting the amount from the total amount so that we will know where we have gotten to. If you don't do it that way, you finish solving for everything just to realize that even the amount will not get to the last part. I hope you get that. So now that we are left with 1882, we are going to subtract. We are done with 600, so we are subtracting 600, and we are going to get 1282. 1882 minus 600, right? 1282. So 1282, we move on to the next one and check. The next one is next 3,600. The next one is next 3,600. We are left with 1282, but they are saying what? 3,600. So since the amount here does not meet this condition, we are not going to use the condition in the chart, but we are going to use our remaining amount, just like when we were treating inventory. Don't forget. So we are going to use our remaining and say next 1282. And but we will use what? The percentage there. We are not going to use the amount, but we will use what? The percentage there. So we are using this to multiply the percentage 17.5%. Okay, that is what. If you don't understand, kindly go back to the video on taxes and payroll. You watch it, you will understand, then you come back. Okay, yes, it is because the video is there, that is why I'm just running fast and not really teaching it into much detail. Okay, yes, so when you multiply it by the 17.5%, you are going to get 224.35. Okay, so yes, we have gotten our taxes right at each level. So we are going to add everything together to get our regular tax. Okay, our regular income tax, regular tax or regular income tax. And so let's add them: plus 60 plus 7.450. Yes, so we are getting 291.85. Yes, at this level. So now the regular tax that they said we should calculate for who? Kumoji Zolasi, right? Yes, that is question 45, right? Yes, question 45. So the regular tax is what? 291.85. Okay, 291.85. Now, question 46. I'm cleaning this side. Okay, yes, cleaning this side. Let me read the question before. How much tax does Gabriel? Okay, so different person. Okay. Let's check. There is another question on Kumoji Zusali. We don't want to finish calculating everything about him, then we come back again. Okay, so once we have gotten all the details, let's do what to how do we call it? Let's do what to use every calculation about him to solve the follow-up questions. So please check question 50. Check question 50. You see that they are asking what is Kumoji's salary totally what deduction for the month. Okay, so the total deduction, let me see so that I don't clean. So total deduction, okay, the total deduction is equal to what? The total tax, okay, the total tax plus net plus others. Is that good? So the total tax is going to be the regular tax plus what? Overtime tax. Okay, regular tax. I've claimed the overtime income. Overtime income, but I'll calculate it again to calculate the overtime tax. So since we have the regular tax, we have the SNET in the question already. For him, we have the others. So all that we need is what? The total tax. And the total tax is the regular tax plus overtime tax. Okay. So the total tax. I have this, I am left with this. So total tax is equal to the overtime tax plus the regular tax. I hope you get it. We have gotten a regular tax, so we need the overtime tax for him. So we say overtime tax is equal to, now how do we calculate the overtime tax? The overtime income times 10%. Okay, so now what is the overtime income? The overtime income for him, the number of hours he worked, commodities salary, is 62. So his overtime hours is 22, and the overtime rate is going to be um 58. Is going to be 58 times 1.5. Okay, yeah, so the overtime income is 1,900 and overtime tax. Okay, so let me just write the formula first. Overtime income times the rates. Okay, so now how do we get the overtime income? This is regular income. So I can clean this side and clean this side as well. So overtime income times rate. So now we have the overtime income to be, we have already calculated for it, but it is because I have not solved the questions on the paper here. So that is why sometimes when I just clean the board, I miss the answers. Okay, yes. So overtime income is equal to 1,914. Okay, that is the overtime income. So if you need the overtime tax, for him, it is going to be this income 1914 times the overtime rate, which is already in the question, 10%. Okay, I am trying to break everything down for you to understand here, so that when you get to the exam, so you can skip some of the procedures. I hope you get that. So overtime tax in this context, one decimal place. So you are going to get 191.40. Okay, you are going to get 191.40. So this is the overtime tax. You have the regular tax. Now from the formula, the total tax, you have the regular, you need what? The overtime. So let's say your total tax is equal to the regular tax, which is 291.85, plus the overtime tax, which is 191.40. So 291.85 plus 191.40, and that is what? 483.25. 483.25. Okay, so that is the total tax. So now that's check from the table. Now that we have gotten the total tax, what we are going to do is that we are going to add the SNIT to the total tax and the others. So for the total deductions, it is going to be the total tax here, 483.25, plus the SNIT allocated to his name, that is 127.60. Then we say plus the SNIT, right, which is 100 from the table. Okay, so we are going to add everything plus 127.60 plus 100. Yes, so we are going to get everything. The total deduction in this context is going to be 710.85 Ghana cedis. 710.85 Ghana cedis. So that is the total deductions for him. Okay, for him. Yes, it would be better I use the pronoun. Okay. So now that we are done with his own, let's move on to Gabriel. Gabriel Shen. So how much tax does Gabriel Shen pay in total? So they just want us to calculate for the total tax, that is the regular tax and the overtime tax. Okay. Yes. So I'm going to clean this part and see whether I can use it for. So let's first calculate for the regular tax for him. You know, that is question what? 46, right? Question 46. And you know, question 46, the total tax is equal to regular tax plus the overtime tax. I hope that is good. So now how do you get the regular tax? Regular tax is equal to your taxable income, right? Okay, so for regular tax, we don't have a formula for that, but we are just going to use the table. Okay, so you just have to get your taxable what? Income. So you first have to get your regular earning, then you subtract your allowances to get the taxable income, then use the taxable income for the table. As simple as that. So for the regular tax, let's first calculate for the regular income or the regular income. So the regular income is equal to what? Let's check Gabriel from the table. The hourly rate is 68 and the time is 58. So the hourly rate is 68 and the hours worked is 58. Is that not it? 58, yes, of course. So what we are going to do is the regular, we are going to take 40 from here. So regular income, and that is what? 40 multiplying the rate, which is what? 68. And so 40 times 68 is what? 40 times 68 is what? 2,720, right? 2,720 for the regular income. Is that good? So now that you have gotten the regular income, what do? You take your allowances from regular income so that you get what is called taxable income. I just keep on saying it so that it will just stick in your mind. So now don't forget this table or this question, we don't have anything like allowances, right? So we will say our taxable income is equal to our regular income 2720 minus allowance is 0. So at the end we are still getting 2720 as our taxable income. Okay, as our taxable income. Now that you have gotten a taxable income, let's use the taxable income to calculate for, let's use the schedule. Okay, yes, we are going to use this income on the schedule to get the regular tax. Okay, so the amount is 2720, right? So for our first 288, the tax is going to be 0 Ghana cedis, right? Then the next, so we will just subtract 288 from here. And what is it remaining? Minus 288. So we have 2432 left. So for the next one, it is 150 times 5%, right? I've cleaned that one, yes. So 150 times 5%. I think it was 7.5 or so. Times 5%. Yes, it was 7.5. Where is it? I've cleaned it. Okay. So 7.50. Okay. So now that we are done with the 150, we take our 150 out from this amount. 2432 minus 150. We are left with what? 2282. Okay. So now we are moving from 150 to 600. So we say next 600 is going to be 60 because it is 10%. It's going to be 60. So we take the 600 from here. Once you are done with it, you take it so that you know where you are heading to or what you are left with. 1682. And so we check the next one. The next one is 3600. Yes, this one is way lesser than that is the 3600. So we are going to use this amount, which we say next 1682 multiplying 17%, 17.5%, or is it 17%? 0.5%. So that is 294.35. Okay, so now when we finish, we add everything first, next. Okay, so this plus 60 plus 7.50. Okay, and at the end we have 361.35. 85. So this is the regular tax. Okay, so the regular tax is what? 361.85. Now that we are done with the regular tax, we need total tax. So we are done with this. It is left with this. How do you get the overtime tax? Let me clean this one. Overtime tax. The overtime tax is equal to your overtime income times the overtime tax rate. Okay, so how do you get the overtime income to? Because the tax rate has already been given in the question. Okay, so you say overtime income, and that one is equal to the overtime rate for who are we? That is Gabriel. So the overtime rate, his number of hours is 58. So if we take 40 out, we are left with what? 18, right? So it is going to be 18 hours multiplying. Now what is the hourly rate? The hourly rate is 58. So we say if you want to get the hourly rate over time, it is 58 times 1.5. I hope you are aware. So 58 times 1.5, and that is what? 87. I hope that is clear. So 18 times what? 18 times what? 87, right? 18 times 87. So 18 times 87. What are we getting? We are getting 1,566. Okay, 1,566 as the overtime income. So if you need the overtime tax, this is the income. You just multiply this by the rates. Okay, so overtime tax, it is equal to the 1,566 times the 10% rate. So your overtime tax will be just one decimal place. So 156.60. So now that you have gotten overtime tax and the regular tax, this is the formula. You have gotten overtime, so you add the two. So the total tax that they are asking for, total tax, will be equal to what? Your regular tax, 361.85 plus the overtime tax, 156.60. Okay, so when you add the two, 361.85 plus 156.60, you have 518.45 as your total tax for Gabriel Ishan, and you are done. I hope that is clear. Okay, so that is question number 46. Now let's move on to question number 47. Now let's check. Do we have Gabriel, anything about Gabriel again? Yes, we do. That is question number 49. So let's skip to question number 49. Okay, let's skip to question number 49. So question number 49, we are supposed to calculate the net income. So we have to get the gross income, then we take all the total deductions, then we are done. So what we are going to do here is that I can clean this part. What we are going to do here is that the gross earning for him is going to be the regular income plus overtime income. Regular income plus overtime income. Okay, yes. So do we have the regular income here? 2,720. So we have the regular income to be 2,720 plus, do we have the overtime income? Yes, 1,566. 1,566. So we just add the two. Okay, we just add the 2. 2720 plus 1566. Okay, so you are going to get 4286 as your gross earning, right? Then minus deductions. So if you check Gabriel Shan, yes, he has SNET and others. So we are going to add the total tax to the SNET and others to get the total deduction. So we are done with the gross earning. This is the gross earning. This is the gross earning. So total deduction is equal to the total tax, or let me say tax plus nets plus others. Now we have the tax, the total tax 518. So we have the total tax to be 518.45, right? Plus the SNET from the question or the table. Gabriel SNET is 149.60, 149.60, plus the others for Gabriel is what? 550. 550. So when you add everything, 518.45 plus 149.60 plus 550. Okay, so you are going to get 1218. 1218.05. Okay, so that is the total deductions. I hope you get it now. So now that you have gotten the total deduction, you take it from the gross earning to get your net income. So your net income in this case is going to be your gross earning, which is 4,286. Okay, minus your total deductions, that is 1218.05. So at the end you are going to get, it is 4286 minus 1218.05, and at the end you are going to get 3,067.98. So this one becomes the net income for Gabriel Ishan. Okay, so now it means we are done with question 49 and 50. Yes, in advance. So we are only left with 2 questions, 47 and 48, and that is for Atani Akobila. Yes, so that one too, we are going to calculate for the SNET contribution for him, because from the table they didn't provide the SNET contribution for him. So we are going to calculate for the SNET contribution, then we calculate for the net income. I hope that is clear. So it means there is a work to do about him. So for him, you are going to calculate for regular income, regular income, overtime income. You add to get your gross earning, right? Then when you finish, you calculate for overtime tax, regular tax to get the total tax. Then you also calculate for SNET, because already the three they gave us the SNET contribution already. So this one we just have to take 5.5%, then you multiply it by the regular income to get the SNET, and that is all. Then you add your others. Okay, so I'm just giving that of what is the name, Atani Akobile's question to you. That is question 47 and 48. Kindly solve it and provide the answer. Then you just write Akobile's net income equal to, you give me the figure. Akobile's SNET contribution equal to, you give me the figure. Okay, so now let's move on to the next question. Okay, under inventory and turnover. Okay, so now let's solve a question under inventory. Okay, let's solve a question under inventory. So it says the following is an extract from the inventory records of Casapreco Kumasi Limited. The net sale for the period amounted to 220,000 Ghana cedis. Okay, so let's first write the parameters. The net sale amounted to The net sale amounted to 220,000. Okay, 220,000. All right. The cost of goods sold was 210,600. Cost of goods sold was 210,000, right? 600. And purchases amounted to 280,000. We have purchases as well. 280,750.75. Then, okay, that is it. So use the information to answer question 32 to 41. Okay, so from the table we have the item, unit cost, and what quantity. So for beginning inventory, we have it there. Ending, we have beginning February, May, July, October, November, December. We have all the units cost there, and we have the quantity. In a situation whereby they give you a unit cost and market price, you always have to go for it, the unit cost. Okay, so now what is we are starting with a question. The ending inventory is what? 508. So it means at the end of the year you were left with 580 items. 580. Okay. Okay. So what is the average price per item purchased in the period, including beginning inventory? You should take it to what? Two decimal places. So what is the average price per item? So now how do you get the average price per item? If you want to get the average price per item, the average price per item, it's very simple. Your total extension, okay? Total extension divided by the ending inventory, or sorry, total extension divided by the total quantity, not the ending inventory, the total quantity. Okay, yes, total quantity, and that one becomes the average price per what? An item. This one we are not going to calculate for any ending inventory or anything. Everything in the table, we want to know the price for just one item. Okay, and it's just the total extension over the whole quantity. And so now we are going to create an extension, because we are going to use that extension to calculate for most of the questions. So I'll be creating the extension here, so that in case when maybe we get a question, then we refer to the extension. So how do you get the extension? So extension. Once you see a question like this, yes, you'll be needing what? Extension. So you have to know how to calculate for extension. So for extension, the first one is beginning inventory. Okay. The first one is beginning inventory. Beginning inventory. Then we have February, May. February. We have May. And what again? We have July. We have August. We have July. We have October, November. October, November, December. Okay. So now what is the extension for each? When we say extension, extension is equal to unit cost. I didn't say market cost. Unit cost multiplying quantity, right? So the cost times quantity gives you the extension. Okay. So for beginning inventory, you see we have the unit cost of what? 42.15. So 42.15 times the quantity is 115. Okay, so 42 times 15 times 115 is going to give us 4,847.25. Then for February, we have 58 times 135. We have what? 58 times, no, I've forgotten we are dealing with the finances. 58 times 135 as the quantity. And that is giving us 7,830. Then for May, it is 61.05 times 150. And so that one is also giving us 9,157.50. Okay. Then we move on to July, 66.50 multiplying 165. And that one is also giving us 109 10,972.50. Then we move on to October, the extension 74.10 times 175. And the extension for October is what? 12,967.50. Okay. Then we move on to November, 80.15. So 80.15 times 225. Okay. And we are going to get 18,033.75. Then we move on to the last part, that is December, 86.50 multiplying 260. Okay, and that one too, we have 22,490. Okay, so we have the extensions for every item in the table. Okay, so let's start with the questions, then we know what to do as we tackle the questions. Okay, so yes. Okay, what is the average price per item purchased in the period, including um, beginning inventory? So price per item, we have the formula here. So we need the total extension, then we calculate for total quantity. So let's add everything here to get the total extension. Okay, so this plus this, which is 18,033.75 plus 12,967.50 plus 10,972.50 plus 9,157.50 plus 7,830 plus 4,847.25. Okay, so at the end of the day, we are going to have 63,808.50. Okay, so this is our total extension. Now let's also, since we have the total extension, let's also calculate for the total quantity. So from the table, the total quantity, we have 115 plus 135 plus 150 plus 165 plus 175 plus 225 plus 260. Yes. So we have the total quantity to be. So let me clean this line. We have the total quantity to be 1,225. Okay. Yes, we have 1,200 and what? 25. So now let's calculate the question number 32. The average price per item is going to be the total extension, right? So it is going to be the total extension. And the total extension is this 63,808. Okay, so 63,808.50, right? So 50 divided by the total quantity 1,225. Okay, so 63,808.50 divided by 1225. Okay, and at the end of the day you are going to get 52.09. Yes, you are going to get 52.08857. And so because it is currency, you have to make it in two decimal places. So it is going to be 52.09. I hope that is correct. Yes, so this is the average price. This is the average price per item. Average price. Okay, so this is the average price. Now let's move on to the next question. What is the extension for the month of October? So the month of October, we have this extension. So our answer is what? This. So let's say October extension. October extension is equal to what? 12,967.50. Okay, that is for the month of October, and we are done. Now the next question is, this is 33. The next question 34 says, what is the total extension? So the total extension is equal to what we have down there. That is 63,808.50. Okay. Yes, that is the total extension. So now we move on to the next question. What is the value of inventory using the average method? Okay, so that is question number 35. Now for the average method, you have the average price, right? And since you have the average price, you check out for the ending inventory. So the number of items left in the warehouse is 580. So if you want to calculate for the value of those items in terms of the average method, the average or the weighted method, okay, it is average, or sometimes you can also see weighted. Okay, so for this method, it is what? The average price times quantity. Here we are saying we want to know the number of items in the warehouse. Now, all the value, do you get it? The monetary value of those items. So the items left is what? 580. So now what is the monetary value of this 580? It means before we calculate for this 580, we have to know the price per one. Okay, and we know the average price. The average price is the price per one. So if you have the price per one and you are going to look out for what? The price for all these 580, you just multiply this price per one by the 580. Okay, so the average method is what? The average price times the ending inventory. Okay, ending inventory. So the average price is what? We have 52.09. So 52.09 multiplying the ending inventory 508. So our final answer is going to be 52.09 times 580. So we have 30,212.20. So this is the average method. So the whole 580 items in inventory, the price or the monetary value of those 580 in inventory is this. Okay, now before you can do that, unless you get the average price, then you multiply it by the ending inventory. So if you don't really get it well, unless you go back and you watch the video under inventory and turnovers, yes, we solved similar questions there and I explain them into much detail. So you can go there and watch it again. So question number 36. Question number 36. So I'm cleaning this one. So question number 36, it says, what is the value of inventory using the first in, first out method? So FIFO, okay. So first in, first out means what? The one that came first will be the first you will sell, okay. So if you want to determine the value of inventory, you start from the bottom, right? Then if you are calculating for the last in, first out, you start from the top. Just have this ideology in your head. You don't need any interpretation, you don't need any explanation before you understand it. Always just conform to the pattern. That if you are solving for FIFO, just start from down, okay. Then when you are solving for LIFO, you start from what? The top. That is it. So this one, we have the ending inventory to be 580. And from the table, we are going to start subtracting those quantities from 580 till it gets finished. I hope you get it. So we are going to create extensions for them. Now, extension for December. So we are going to create extension. So for December, what is the quantity for December? 260. And you know 580 is more than what? 260, right? Good. So since it is more than 260, it is going to be your 260 quantity multiplying what? Your unit cost, which is 86.50. I think we have already calculated for the extension, so let me bring it here. So for December, when you multiply the quantity 260 by the unit cost 86.50, you will get what we have there. That is why I said you should just create extension so that anytime you need extension, you refer to it and you pick the items from there. It will help you boost your calculations. So 490. So this is the extension for December. Now, when we take 260 from 580, 580 minus 260, we are left with 320 more items in the warehouse. So it means we can come up a little. So from December, we move on towards November, right? So we are going up like that. So we don't have anything left. I hope you get it. So for November, we are going to use 225. So we are going to use 225. And you know, 320 is more than that of November. So November, we are going to use the full extension there. November. The full extension is what? 18,033.75. 18,033.75. Okay. So now when you take 225 here, you are left with 95. Now let's check October. October is 175. October is 175, but we are left with only 95. So we cannot use that 175 because some parts of the 175 has been what? Sold. Do you get it? Some part of the 175 have already been what? Sold. So what we just need here is what? The 95 here. Okay. So we are going to say October. Instead of using the 175, we are rather going to use what? 95 times the unit cost. I hope you get it. Yes. So once it gets to the last part and you think or you see that the value in the table is greater than the last part, you ignore the one in the table, then you use the remaining one to multiply the unit cost. So in this case, it is going to be 95 multiplying the unit cost in October. That is 74.10. Okay. So that is 7,039.50. Okay. So these are the extensions for the 3 months. If you just add them, that is the answer for the FIFO. Okay. So this plus 18,033.75 plus 22,490. Okay. You are going to get an amount of 47,563.25 as FIFO. Okay, as FIFO. So now you are done calculating for what? FIFO. I'm taking the procedures again. We had 580 in inventory, right? So it means for FIFO, you start from down. So you are going to subtract the quantities from 580 till it gets finished. Okay, yes. So first, when you start from the down, the first month that you see there is what? December. And December has quantity of what? 260. So 260, the 580 is more than 260. So it means you are going to use the full extension for December. I hope that is clear. Now, if you take the 260 from this, you are going to be remain with what? 320. So you still have 320 items in the warehouse. So this is what the remaining. Now, the next month after December is what? November. We are climbing up. So November 2, we are going to need 225. And since the remaining is more than what we need, we are going to we are going to bring the full extension with here. I hope you get that. And as simple as that. And when you take that of November, the quantity 225 from it, you will be left with what? 95. And this 95 for the month of October, it was given in the table as 175. But we only need what? 95. So since it is 175, you just throw the 175 away. Then we use what? The 95. And so when you use the 95 and multiply it by the unit cost, that is when you get this. And you are done. You add all the extensions and this becomes your final answer for what? FIFO. So we are going to do same for LIFO. Okay. We are going to do same. So this is 36. So this will be 37. Okay. So question 37, it says, based on the first in, first out philosophy, how much of the ending inventory is from October? How much of the ending inventory is from what? October. So how much of the ending inventory is from October? Now from this principle, the answer, how many quantity or how many units did we use to calculate for the extension for October? We used only what? 95. Okay, so you don't say 175, you say what? 95. So the answer for 37 is 95. So move on to 38. So question number 38. What is the value of inventory using what? Last in, first out. So that is LIFO. Okay. And now one we are going to start from what? The top. Okay. So the ending inventory is what? 580. So we are going to start taking them out from the top. So we are starting from beginning inventory. So let me clean this one. Beginning inventory is 115. Okay, so we take 115 from here. And since the remaining is more than what we need, we will give the beginning inventory full extension, right? So full extension, that is the full extension is not a terminology under the business math, but then I'm saying it because you see, under the month or in the month of October, we used only what? Some part of the quantity. So we didn't get the full extension here. The full extension for October is this. So you see, we didn't get it here. We had what? Some part of it. So the full extension that I'm saying is just some terminologies. Okay. Yes, it is not specifically a terminology under the business math, but it is just a term that I'm using here. Okay. So when you take 115 from 580, you are left with 465. And now 465, how many do you need? The next month is February. The next month is February. And February, how many do you need? You need how many quantity? That is 135. So that 135, you multiply it by 58, and you are going to get 7,830. So February, we used 135. So we are going to take it out, and we have 330 left. Now we move on to the next month. We still have some left, so we are moving on. The next month is May. May, we are going to use what? 150. Then we multiply it by the corresponding unit cost, which is 61.05. So May, it is going to be the 150 there by 61.05, and it will give you the 9,157.50. Okay, so that is it for May. I hope that is clear. So now May, we spent how many? 150, right? So we are taking the 150 from here. Minus 150. So we are left with 180. Okay. So we are still what? Moving on. Now from May, we move on to what? July. July, we are only going to take 165. And so we move on to July. We are going to take 165. And so that 165 will multiply the 66.50 to give you 10,972.50. Okay, that is it for July. We still have some left, because if you take 165 from how do we call it, 180, you are going to get 15. So now we are left with 15. Now from July we move on to October. October has what? 175, but we only need what? 15, right? So we are going to use 15, only 15 for October. So we will use the remaining 15 to multiply the unit cost in October. Do you get it? You are not going to use the 175. So 15 times 74.1, that is what we are going to do. 0.10. Okay. So we have 1.50. Is that good? Yeah, so this is the extension for October. Then we add everything to get our answer. Okay, so plus 10,972.50 plus 9,157.50 plus 7,830 plus 4,847.25. So that one is going to give us 33,918.75, and that is the answer for what? LIFO. Okay, that is the answer for LIFO. So I hope you understand the FIFO and the LIFO now. So now let's move on to the next question. Let's move on to the next question. 39. What is the value of inventory using the gross profit method if Casapreco decided to determine this at what? Retail. So we are going to determine 39. Gross profit method at what? Retail. At retail. This is what we are going to do. I hope that is clear. So at retail, what is the formula? The formula is what? Value of inventory. Value of inventory is equal to your merchandise available for sale, right? Yes, your cost of merchandise available for sale minus net sale. Do you get it? But if it was to be at cost, that is when it becomes cost of merchandise available for sale minus cost of goods sold. But in this case, this is at retail. So we are going to say cost of merchandise or merchandise available. So cost of merchandise available minus net sale. Okay, and that is it. So we check from here. We were given what? Net sale, but we don't have the cost of merchandise what available for sale. And this one, you can calculate the cost of merchandise available for sale. That is why always it is important to write the formula, because if you write the formula will tell you what to do. So here you see, I wrote cost of merchandise available minus net sale. I've realized I have net sale. So what is left for me to calculate is what? Cost of merchandise available. So now what is cost of merchandise available? And cost of merchandise available is also equal to what? the beginning inventory plus what? Your purchases, right? Beginning inventory plus purchases. So what is the beginning inventory? It is here in the table. You were given the unit cost and the quantity. So when you multiply the unit cost and the quantity, you get the beginning inventory in monetary terms. They are not going to provide you with the value of beginning inventory, so you just have to be smart. This is your beginning inventory. So your beginning inventory is 4,847.25 plus they gave you the purchases, which is 280, 750.75. So when you add the two, 4847.25 plus 280,750.75. So you are going to get 285,598. This is what you are going to get. Okay. So now since you have gotten your cost of merchandise available, okay, now your value of inventory your value of inventory is the cost of merchandise available, right, from the formula. So which is 285,598 minus, let me bring it down here, so it is going to be 285,598, that is cost of merchandise available, right, minus your net sale was given in the question, 220,000. So when you solve for this, you are going to get 65,000. Let me just 285,598 minus 220,000. 65,598. Okay, so this becomes your answer for what? The value of inventory at retail. I hope that is clear. Okay,